Uber reported quarterly financial results today before the markets opened on February 5th, 2025. The numbers sent the stock price down almost 10% on the back of the news. Of course, I'm disappointed about that result because I've had Uber stock rated as my top stock to buy here in 2025. So I'm going to review these results from Uber in this video, and I'm also going to update my recommendation for Uber stock and let you know if I still think it's the best stock to buy right now and why the stock price is down and if this is a buying opportunity on the dip. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Uber's CFO saying that we believe we remain undervalued despite these strong fundamentals and plan to be active and opportunistic buyers of our stock. That's good to hear. Uber later in the press release here said that they bought back over $1 billion of their shares and they still have $7 billion remaining in their buyback authorization. I wouldn't be surprised if Uber accelerates the buyback, especially if the stock remains at current prices or lower. Uber reported gross bookings of 18% increase to $44.2 billion. Revenue increased by 20% to $12 billion. Revenue increased by more than bookings because Uber continues to increase the percentage it takes from overall gross bookings growth. The income from operations also increased by $118 million to $770 million. And the thing I like most about Uber is the asset-light business model and the cash flow it generates. Net cash provided by operating activities came in at $1.8 billion, and free cash flow less capital expenditures was $1.7 billion. So you can see here that Uber only spent about $100 million on capital expenditures compared to the cash flow from operations of $1.8 billion. So the business throws off a lot of cash flow, and Uber can return a lot of that to investors because they don't need to reinvest in the business. That's the beauty of the business model, is that Uber's drivers bring the assets that Uber needs. Uber's drivers pay for the cars. They own the cars for the most part, and they bring those assets and they let Uber use it essentially for free as a result of paying the drivers for every ride or every food delivery. This is one of the reasons why I've had Uber stock rated as a buy for so long. And to start this year, I upgraded Uber as a top stock to buy. All right, so here's why the stock price is down. And it's because of the forecast for the first quarter. Uber's forecasting 19% growth in gross bookings, which would translate to gross bookings of approximately $42 billion to $43.5 billion in the first quarter. That would be below the $44.2 billion the company just reported in the fourth quarter of 2024. So a sequential decline here in revenue, but a year-over-year increase, as typically the first quarter is a slower quarter for Uber than the fourth quarter is. So the tepid forecast has investors concerned about the company's prospects looking ahead. What did the management team see that they are forecasting this lower gross bookings number of just 19% up year over year? Still, if they hit the midpoint, the growth rate would be an acceleration from the previous quarter. In the current quarter, the one they just reported on here, their bookings increased by 18%. So at the midpoint of 19%, it would be an acceleration of the rate of increase. And I've talked a lot about why that second derivative is important. And so the second derivative would still be increasing here quarter over quarter for Uber. Regardless, the market prices in some of these forecasts, and when the forecasts are below market expectations, stock prices tend to decline. And in my opinion, sometimes these create opportunities for long-term investors to scoop up shares of stock because the market has overreacted. And I've said this many times, markets often overreact on both sides. On the upside and on the downside, markets overreact. They overreact to positive news and they overreact to negative news. And so take that for what you will. If you're thinking about selling, a good time to sell is on an overreaction to the upside. And then if you're thinking about buying, a good time to buy is an overreaction to the downside. These aren't the only opportunities, but these sometimes present opportunities, which I'm going to answer by the end of this video if this is indeed an opportunity for Uber. So Uber's monthly active platform customers increased again by 14%. They now have 171 million monthly active platform customers, and they increased the number of trips by 18%. The number of trips increased by more than the number of monthly active platform customers, which demonstrates that not only are they adding new customers to the platform, but existing customers are using the platform more frequently. And this also connects with my theory that Uber is becoming an excellent choice now for most transportation options. In some cases, it's more expensive than using your own car, but now because the cost of car ownership has increased by so much, that makes Uber an attractive substitute. I teach this when I teach economics at university, and that is the substitution effects, substitution and complements, right? When, for instance, people buy coffee and creamer together sometimes. So when the price of coffee goes up, the demand for creamer goes down because people buy in combination coffee and creamer. So when one goes up, demand for the other one goes down, even though the price for creamer may not have increased. Okay. Now, similarly, when you're thinking about the cost of car ownership and the cost of Uber or demand for Uber, when the cost of car ownership goes up, demand for Uber goes up because it's a substitute product. And if you're comparing the cost of, if you're a consumer, you're thinking about this as a holistic decision. When you're thinking about your transportation needs, you're thinking about, do I own a car? Or do I just take Uber and Lyft and other ride sharing companies when I need to? And so when the cost of car ownership goes up, demand for Uber goes up. And the cost of car ownership has gone up substantially in the last 5 years, more so than the cost of taking an Uber has. And so it's made Uber a more attractive option in people's eyes. And you're seeing that evidenced here with the numbers, adding 21 million new monthly active platform customers and increasing the trips per active customer. So people are using Uber more often, more frequently, and that trend continued in this current quarter. Another thing I watch closely with Uber is autonomous or driverless car technology. And my case against driverless car technology is that it's not necessarily going to be all bad for Uber. And that's been my investment thesis, is that the market thinks it's going to be all bad. I think it could be good, and it could be really good, and it could be really bad. I have more of a two-sided risk approach here with driverless car technology, and they did make some big developments here. In the latest quarter, they launched autonomous ride service in Abu Dhabi in partnership with WeRide. They also began delivering Uber Eats orders in Austin and Dallas, Texas, via Sidewalk Robots in partnership with AV Ride, and in Osaka, Japan with CartKen. They also formed a joint initiative with NVIDIA to collaborate on new solutions to support the development of AI-powered autonomous driving technology. So Uber is implementing driverless cars or autonomous technology already, and they're taking an incremental approach here, but they're not just sitting back. They're not going to just sit back and let driverless car technology kill its business. They're making inroads here, and the company is in a position to benefit from this with nearly 200 million monthly active customers and the billions of dollars in gross bookings. It has a budget to invest in this technology, especially as the technology can incrementally help existing customers and not be something that they're investing in, hoping that it pays off like 10 years or 15 years in the future, These are things they're investing in that are paying off right now, today. Their customers are benefiting from these services for the most part, except for the initiative with NVIDIA. The customers are benefiting. All right, so Uber stock is now trading at a forward price to earnings of 16, which again is near the cheapest it's been all year. It's been this cheap since January. This is partly why I've upgraded it and rated it as one of my top stocks to buy. I also do a discounted cash flow valuation for Uber, and my intrinsic value per share for Uber stock is $112. It's currently trading at $69.75, according to the latest update from Google Finance here, as I have the formula connected to this spreadsheet. To update my recommendation, where do I think Uber stock is? And do I still think it's a top stock to buy? The answer is yes. I'm reiterating that recommendation, putting Uber as my top stock to buy right now. So it is a buying opportunity on the dip. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.